Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. My name is Henry. Today is Wednesday, July 13. The time is 2:50 a.m. GMT, and we are looking at the chart of Exxon Mobil. This is XOM, the ticker symbol. We can see right here we ended with B over here, so that means we are now within with C, right? We are within with C over here, and this is the intermediate degree, right? Let's take a look. We got this in the member area. We have this different degrees. We are now in the intermediate degree here in the with B, and with C is in progress right now, which should subdivide into 5 waves. So we have with 1 of the primary degree ended here, and then now we are now in the with 2 correction to correct this 5 waves down. And as long as we stay below 93.26, we should be going down. Right side is down with a red stamp. So what this is saying, because a lot of people don't understand Elliott Wave and they are beginners, this is not saying this is bullish and it has to rally, therefore I'm bullish. No, this is suggesting the structure is bearish, and whether or not, so the interpretation is whether or not we go up another leg up, most likely we will eventually resolve on the downside and break below here, as long as we don't break above 93.26. This is how we should be reading the charts, not necessarily that it has to do another leg up first before going down, but it is more towards we should be looking for the downside, eventually breaking below $80, as long as we don't violate above 93. So assuming that we are really going to rally here, then the next 100% extension potentially can see sellers right here around 89, right? 89 all the way to 93 is the 100%, 161.8% extension of this 3 swings rally here. Now we zoom out. If we are zooming out, let's place with B here in the daily time frame. That will be right here. So if this is the B, then obviously this is your A, right? And then you can see, if I look at the daily time frame, what we have here is a sequence of what we call a bearish sequence, lower low. It's simple as that. A lower low is a bearish sequence. And as always, if you have a 3 swing down, then you should be looking ideally minimum 100% extension. $71.55 is the ideal target on the downside, right? Now we can also see, if you look at the RSI, we have a divergence right here. So that divergence doesn't mean that it is, basically bullish. No, a lot of people use divergence in that sense. If there is a divergence, it's bullish, or vice versa. If there's a divergence at the top, it's bearish. Actually, this is kind of suggesting that it should see more downside because of the divergence, because the idea is that in a corrective structure like an ABC or WXY, at the end of that corrective structure, you should have no divergence. So if this is, let's say you want to call this C completed, it is possible in a truncated scenario. Truncated means the C does not reach equality to the A. But when you want to call this completed, usually you won't see a divergence like this. It's completed means the C also will be, the RSI will be below the A. So in this case, you still see a divergence, which is actually confirming the idea most likely we're going to see for the downside still before we finish this entire structure. So therefore, again, based on the 1 hour chart, as long as we stay below this B, we should eventually go lower. What's the alternate? The alternate could be that we don't need to do another leg up. We can just go down straight away and looking to extend lower within the select. That's another possibility. And the last possibility, right, that could throw people off, I know a lot of people don't like to hear the word possibilities. They will say, well, if there's too many possibilities, therefore what's the point, right? Now the reason that I'm explaining the possibilities is not so much that I'm trying to cover myself, because this is like a game of chess. You need to know what are all the possible options your opponent can throw you, right? and then you take the best, basically based on all that probabilities we are going to rank them, which one is more likely than the others, and then we act accordingly. That's exactly what the market is and what Elliott Wave is. It's not like hocus pocus where you know exactly what the outcome is with 100% certainty, right? So now the other scenario with a divergence here is doing a flat. So we can have an A, B, and then C expanded flat. In that case, we will have 1, 2, 3, 4, 5. Now in that kind of flat, expanded flat scenario, then yes, this rally can extend and it can even break above here, above this 93.26 before going down. But because of the lower low sequence with a divergence, it suggests that at the end of the day, more downside is likely. But there are again at least three possible outcomes. One is just going down straight. Another is doing what we are showing, which is the primary view, right? I'm not trying to change the primary view. The primary view still remains the same. There is rally and then going down as long as we stay below 93, and that means the next 100% can find sellers right here 89, and then from here we can go down, right? But the alternates become we just go down straight away, or else we go expand it flat like this, and then going down, right? Now of course, if anybody is trading XOM and then it does an expanded flat and they're trading to the downside, then they might get stopped out. But that's part of the game. It's not about winning 100%. Nobody wins 100%. And if you believe that we can win 100%, then obviously you have not traded for that long, right? So that's it, the update for today. And as always, if you want to check our service, we have 14 days trial. The link is provided in the description of the video, and I'll see you all again next time, and have a nice day everyone.